Hello and welcome to the HI European Market Neutral monthly video for February 2022. I'm Paul Marriage from Tellworth Investments. So this has clearly been a very difficult month, dominated by geopolitics, Ukraine invasion. I think the background to this month is pretty well known. Actually, this was a good month for the fund. We performed strongly and the balance of the portfolio actually delivered very well over the period. It kind of did what you want the fund to do, behaved in a market neutral way and made you a positive return. How do we do that? Actually, it was balance again. While we were short some of the growth stuff that rolled over and we were long some more value things, we had a real balance. We had a tough time in things like long BNP. Banks came off a lot on the invasion. But we also had some good short names as well across the growth sectors. Towards the end of the month, we had a significant win with M&A with a bid for Oxford Instruments. Oxford Instruments is a UK high technology business. The shares were down 30% year to date. It trades on 30 times earnings, and it's been bid for by one of its UK peers, Spectris. So that's interesting in that it shows that there's clearly value in public markets, and if people ignore value in public markets, then trade buyers or suitors will come in, or private equity. So we've been talking about, and we've often talked about M&A being a positive driver to markets during uncertainty, and that's definitely been the case here. When we look forward, clearly geopolitics is likely to dominate returns again, but keeping the balance in the portfolio will remain important. And we're conscious that some of the popular shorts look like they're squeezing very hard onto good news in limited volumes. So again, it's about making sure the portfolio has that spread of stocks and sectors and countries, both long and short, to give it the opportunity to deliver again like it has this month in tough market conditions. It's been a period when company news has been largely ignored, so we can't stand up and say that we were long particularly good news or upgrades or short downgrades. That wasn't really the kind of market we saw. This is typically the case when we have large geopolitical events. That kind of news just gets pushed backwards. There's no point in us trying to second guess the developments in Ukraine. What we've got to do is just keep focused on the portfolio, keep it dynamic, and make sure that we don't miss a change in market conditions. It's possible that the situation in Ukraine may make us think a little bit more about a few longer term themes. People will focus on where energy comes from. People might focus a little bit more on consumer spending, where that happens. Travel may dip a bit. So there's a few factors we need to think about there. And it's possible there may be a slight change in policy with a bigger focus on national security and defence. We've had a couple of beneficiaries there in the fund in Chemring and Kinetic in the UK, both defence stocks that were strong into the month end. So governments overall may be looking at not just national security, but policies that are generally pro-business, pro-jobs, pro-taxes, and all those things are the kind of things we're keeping an eye out for if perhaps the political narrative changes a little bit. So a difficult month for the world, I think, albeit a good month for the fund. We're going to stay focused. We clearly look for a resolution in Ukraine, a peaceful resolution. And during the next month, we'll work hard to continue to deliver for investors. Thank you. Goodbye.